Okay, so yeah, if anybody has any doubts, I mean, I can take those up first, because otherwise I was just going to, last webinar, what I did is we went in depth into OI breakup. So I just wanted to make 1 or 2 points clear in that, because options OI breakup is something that can give you clear-cut buy and sell signals. So we did discuss that last time in detail, and I just wanted to just point out something, because for expiry day it will be slightly different. So just wanted to point out that. Before that, if you have any doubts, I can take those up.
So regarding the total put call and open interest difference is there, no? The tab.
Yeah, just now, total. Okay, this one.
Total. No, the total put call OI difference. This one. Regarding that one, here actually what I did was just I tried my best to decode it, right? Okay. So when we go down, some figures will be in green, difference between put and call, and some will be in red, right?
Yeah.
So what I did was I gone down where underneath that the charts are there in this tab.
Yeah.
So here, if I go here, what I did is, if I want to buy a put, if I want to, because when the market is going down, we have to buy a put, right?
Yeah.
So others, if the market is going up, I want to buy a call, because they are normally cheaper and better returns will come, because the delta keeps on increasing from 50 to 60, 70, like that's fast.
Fine. Yeah.
Nextly, if we sell a call, we require a lot of margin money, and then actually the speed of the delta will be coming down considerably, from 15 goes to 40, 30, like that, and inversely related. So I just wanted to go for it, and how to decode this one. Right now, if you say in the morning, early morning, in the first tab, this 138, 300 green is there.
Yeah.
Most important from here onwards, we can get a better picture.
Yeah. Most important here, take this only as like we are only looking at build up, and then this is only a sort of bias. Don't try to take signals from here, buy and sell signals. You won't get direct buy and signals here. You will just get an idea of what kind of bias is there in the market. Now this here, the difference in P and C OI, this is basically gives you a positional view. For intraday, look at OI change difference. And not just OI change difference, but again, the difference between this last column, OI change trend, it is actually just the difference between this and these two slots. So this is the difference. Now, whenever you see large figures here, then that means that this is strengthening. Now, this is already a bearish view for intraday. Now, this is strengthening. When you see positive, like against the trend here, now this is clearly a negative trend here going on, because heavily there is call writing, or rather put unwinding plus call writing going on. So it is a bearish view. And then this got strengthened significantly. Now, whenever you get bullish figure here, compare this bullish figure with what has happened previously below that. Just probably about half an hour before that, or few slots before that. Now, if this doesn't seem to be significant when compared to this, then you can just ignore this or probably wait, because you need to have, for this your intraday view to change, then this you need to get some very big numbers, because you have to overpower this selling that has gone in. So this is how you form a bias, actually trend bias. Here in this case, well, there was like, this is nothing, because even if you see this was okay, this was something significant. Even before this was something significant. You need to see something like this, and you compare with what has happened before. Now here, this was not significant, but this was a little bit significant when compared to this. So this would give you some idea. But this again, see, if you see, you won't get clear-cut signals, because this is so heavily into selling going on. So here, this will just give you some idea of what may be happening. For actual buy-sell signals, you need to go and look elsewhere, because total CPOI, I think the only thing that I look at is probably just for the PCR trend, because here overall this, if it goes to one side, then for you to get a reverse signal, it will be very late, very, very late, because this has become so significantly to the negative side that for the trend to change and the OI to overpower the selling that has gone in is going to take significant amount of time. And by that time, the price can really change completely, and then we would be very late. So this, again, this is going to just give you a bias. And once bias is formed, after that, if the move is really trendy, lot of trend has come in and lot of OI has got built up on a single side, then for reversal, then you need to look at other things, because this can give you very, very late signals. I mean, if you see even here, that okay, here this PCR got flattened here, and then by here itself you got a bullish signal. This was fine, but here if you see, the signal was pretty late. I mean, you got somewhere here because the PCR started coming down only over here. So there is absolutely no signal you can really get from here. So this is going to be, especially when the trend has gone on a one side. So one-sided trend, once it happens, if it is a slightly sideways market or not that trendy, then probably you can get quicker signals. But otherwise, then you need to look at other tools also. I mean, this is not the only tool you should be looking at. And also try and change time frames to slightly longer so you get better signals. So here now you'll see these big numbers have to get overpowered. I mean, you need, when compared to this, you have to see if this is any significant. These are not that significant. These are fine, little bit significant when compared to the previous 4-5 slots or so. So probably here there is a change happening, but if you see, it is quite late. I mean, 12:45, 1 o'clock over here.
So
this
green
is where
figures. These green figures mean we should buy the call, huh?
It is not like that. That is what I'll give you a better way to actually buy. If you want to buy sell calls, we had discussed this last time. The better way is to look at options intraday OI breakup. That is
that one.
Yeah. So we'll come to this. Now there's something. Okay, let me first give you an overview of this.
Can you please help us to understand, interpret, the basic, how to understand this?
Yeah. This is. I'll start with the basics here. Now here the first thing I do it when the market starts. Now we'll take a look at yesterday's day. Here is Nifty. Yesterday, the first. Sorry, let me check. 5 minutes. The first 5 minutes. Okay, here I'm saying let us monitor 15 minutes. So even this chart I'll keep at 15 minutes. Now first 15 minutes bar closed at 16,276 futures. This is futures. So the nearest was 16.3. So I'll take 16.3 over here at the money. 15 minutes, 10th March expiry. Now this is the first slot. I start analyzing only at 9:30. So this will get over by 9:30. One thing, very important thing to look at here is that whatever is the latest slot that is going on when market is open, latest slot will get closed only when this time is reached. So this slot will get over at 9:30, and then this will start at 9:30 and will keep updating until 19:45. So you shouldn't be looking, if you are looking at this at 9:35, this slot will be updating, but you should be only focused on this slot because this is not yet complete. So at 9:30, this will get complete, and you have short build-up on the call side and long build-up on the put side. And this is what I call a strong signal. A strong signal is short build-up here, long build-up here, or long build-up here, short build-up here. So this should be one side short build-up, one side long build-up. This is a strong signal. This is also fine. The only thing it says that it is sideways. So if you are an option seller, this too is a strong signal. But this is not a strong signal. This is just a continuation signal. Because here this is short covering and this is short build-up. So it just says that the short build-up on call side is covering, put side is neutral. Whatever was there at the beginning, so long build-up, it is continuing. So this is what I look at. Now, once this is short build up and long build up here, as I refer to this as a strong signal, I'm looking to short call and probably buy put. Now I go to the options chart. Let me take the latest 16.3 call. So I'm monitoring 16.3 strike. So here I will look at 16.3 call and 16.3 put. 16.3 call and 16.3 put. So as we saw here at 9:30, call is short and put is long. Call is short. I have plotted on a 2-minute chart. I have plotted because this is for price confirmation. What I do is this is where I form my bias. That is what is OI buildup indicating. This is what I monitor here. This will still not give me directly buy and sell signals, but this is where I form my main bias. Now I go here, I look at a lower time frame chart. You can look at 3-minute and all that, but fine. I'll look at 2 minutes because I want faster signals, especially exit signal. I want fast. So I look at 2-minute chart with super trend plotted. Super trend is 10,3. Now here, since call has indicated short buildup at 9:30, this bar closes at 9:30 here, 9:29. The bar closes at 9:30. So 9:29 here means 9:29.59, which is 9:30. So here on this bar, I am ready to short the call here. Now if you want to buy, so put is in buy mode here. Put is in buy mode at 9:30. Sorry, this is put.
Sir, this is real data or delay data, sir?
This is 1-minute chart. It updates every 1 minute. This will not update real time. We do not have real time data.
In broker account.
Yeah. No, this is. I mean, I'm saying on our chart we have 1 minute data. We have a 1 minute NSE's 1 minute data feed. So the chart will update every 1 minute only. Over here.
Okay.
On the broker terminal, if you plot this, of course, you'll get real time. So you can plot real time 2 minute over there if you want. Fine. So at 9:30, put
broker account and also same.
Sorry.
Broker account and this one is same, sir.
Yeah, data will be same. Only thing is that here every bar will update every 1 minute only. In broker terminal, it will update real time, but data will be same. There is no change. Data is exactly same. All this comes from NSE's data feed, official data feed. So there's no issue. Okay, let me continue. Okay, 9:31, you are okay to buy put here because put is in long buildup and call is in short buildup. So this is a strong signal according to me. So call you can short here at 9:31 and put at the same time you can buy because this is above super trend and you can short this because it is below super trend. And this, of course, you have to know that your stop loss will be above this. So if you can take this much loss, only then go for it, short this. And if you are buying here and your stop loss will be here. So if you can take this loss, only then go it. And of course, trail your stop loss here this way. You exit here. Before that, we'll see. Now here, every 15 minutes, monitor this. Keep monitoring this. Now you need to reverse this. Now suppose this has to reverse. To reverse, you need. Now this is what I call. Let me point this out. Sorry, 1 minute. For me, this is the second strong signal. First was over here. From here to here, there was no other strong signal. Sorry, I'm sorry. Sorry, here is the second strong signal.
We are seeing only the OI screens.
Yeah, we are not able to see any movement of yours.
Yeah, this is only OI. There is no momentum here. We are only forming
No,
a
tell us
bias
the
here.
time. Can
We
you tell
don't
the
see
timing?
market.
Second one, please.
Sorry.
The timing, what you are mentioning?
No. What I said here, you did you follow this part, the first slot?
Yeah. After
Yes.
that, you said after this one.
Yeah. After that, what I'm saying is there are no strong signals. Sorry, over here there is one more strong. See, when I say strong signals, I mean short build-up and long build-up, or long build-up and short build-up. So 10 o'clock, there is another same continuation signal. So we still continue in the trend. Let me go there. At 10 o'clock, we are over here at 10 o'clock. It's still a continuation signal. So I do nothing here at 10 o'clock. Now here, this is a weak signal. I don't do anything. So I'm saying, and this again is a continuation signal. Both are same. I mean, even though this just indicates sideways because both sides short build up. Even here, both sides short build up. So this whole same trend is continuing here until this here, 11:45. You got it? 11:45, call has flipped from short to long. Here also it had flipped, but this side it is long unwinding. So this is a weak signal. You can ignore. But in the meantime, if you get a sell signal, here you were short. If you get a buy signal before that, then you should exit. Or before this 11:45, if you get a buy signal, you exit your short position here. You actually exit at 11:27 itself. Here at 11:27 is over this slot itself, you are exiting, but you are not buying. You will buy only when your OI buildup is actually indicating a buy. Only at 11:45 over here you will go long. Over here, you are just exiting your short signal that you had entered here. Any doubt until here? Only
exiting on the basis of OI data or signal, super trend signal?
Super trend only. Exit will be based on price because it is critical, because you don't want to rely on bias here because this can be late. This is only for entries. We want to make sure that we are entering with the build-up bias. But exiting, you want to exit based on price. You don't want to take price risk. Again, entry, we are waiting till 11:45 over here. Long build-up entry, because then let OI build-up tell you that it is long here. But you are exiting here itself. Because your super trend has given that signal over here itself. So you exit here. So from here to here, you are in short trade. Then you go long over here at 11:45. Once this is over, maybe over here next bar you will go long here. Because this is you are getting a long build up here and you are a short build up. So you are fine to go long call here and short put here. Now short put here, you were actually long over here, 9:31 here, and you would exit here at 11:25. Then at 11:45 here, you can go short on the puts. Because here you have got the short build up on this side. Now, next important thing, here you have a very strong flip signal. It has reversed. I mean, you went long here, but call is indicating short, put is indicating long. But price is not indicating anything. So you wait. Price again has to be, you will exit based on price. Your entry will be based on OI signal plus super trend signal. So entry based on both, exit based purely on price.
OI signal 15 minutes, right, sir?
15 minutes. I am suggesting 15 minutes because otherwise you will get too many bad signals. 15 minutes, reliable, fairly reliable. You can. It'll be good. I mean, it'll keep you in the trend. I mean, you'll get into proper entries. I mean, proper trend bias will be there. You will get with the trend. Your build-up will be on your side when you are looking at 15 minutes. 5 minutes, 3 minutes is going to be very fast. Then you get too many unreliable signals. So that is, I wouldn't suggest it. For price, go lower time frame because again, all your risk is over here. So here you have to make sure that you are on a lower time frame. Whereas build up, let the build up be on the higher time frame. Because you'll have reliability, then a lot of OI getting build up and all that, and you want to be in that direction. So now you will exit only over here. Call you will exit here, and put you will exit here. Or if you have any targets in mind, you can exit. You're trading multiple lots, you can exit over here. As you're going in the same direction, you can exit. This again, it's up to you. But final, once super trend signal is given, you have to exit full out. And then after that, monitor if you have any signals like long buildup. You have got over here after 11:45, this after flip. Immediately this was a temporary, then this again is continuing. So you are fine to continue over here. Then until the end of day, actually you didn't get anything. You got here, sorry. At 3 o'clock, you got an exit signal. But you are probably out of it much before that. Your 2 o'clock itself, you are out of the calls. And by here itself,
What is the temporary? Please, can you repeat it? What is the temporary meaning?
No, when I say temporary, over here, you were actually short from here. You got long here at 11:45. So after this, you got a reverse signal here. But on price chart, you did not get the exit signal. So you are still in the long trade. So this, I call it as a temporary signal, which got negated over here. Because again, this went into your original long signal. So a long was there, the short you did not get a signal on the price chart. You are back to long. Same here, you were short put. You got a long put signal here, but you did not get it on the price chart. So you are still long. And it went back to short, which was your previous signal. So this, I am calling it as a temporary signal that was there, counter signal that was there in between. But your main trade, long trade, is still going on this way. Your main
both
long
same
trade,
time frame, eh?
yeah, same, yeah, same time.
No,
So this is still
2 minutes. This is 2 minutes, and
this OI 15 minute. OI 15 minute. Price chart, you have to be on a lower time frame. You 2 minutes, 3 minutes, whatever is your preference, it is fine. Don't go for 1 minute, it will be too fast. Okay. 2 minutes is fine for intraday options trading. So your options, say if you are on a buy, then you need very fast signals because the time decay will be against you. We are talking about weekly options, so it can be a problem. So keep this a lower time frame. This is what I suggest. I think even if you're selling, it is fine. Even if you go for 3 minutes, 5 minutes, it's fine. But for buying, you have to be very careful because time decay will be there. You are totally against it. I mean, even on Friday, it was a Friday yesterday, so it was still okay. But from Monday, Tuesday onwards, this will be a real problem. You'll see on expiry days, you can hardly use this. I mean, buy signals are going to be a problem unless there is a very strong trend on one side. Most of the time, sell side is much preferable on Tuesdays, Wednesdays, Thursdays. So you will get very long trades.
And sir, you selected 16300 based on trending OIs, right?
Basically, I just what I did is, see, first 15 minutes bar close. You can take, this is 16276. This is actually futures. You can take spot, see 100 points, 50 points up and down, it doesn't matter. Even if you are trading like 16.4 or 16.2, it doesn't really matter. You will still get similar signals. You will see, because we are just looking at build up over here. So it is not going to matter that much. 50 points, 100 points up and down, because you are going in one direction. So it doesn't matter. You just, anything, whatever you can take spot at the money, whatever is at 9:30, you can decide and you can take it. 9:30, whatever is the closest futures or spots, you can just decide and just keep that. Now, if you can do one thing, if market is really trending crazily, and then from 1600 in the morning and 9:30, it has gone about 200, 300 points up. In between, if you are out of the position, you can go back and change it. Now, if market is at say 16.5, you can start monitoring 16.5 from say 11:30 onwards, because market has gone up that much. You need not just stay with the same. Once you are out of all positions, then you can change this to nearest closest at the money at whatever time you are looking at, and then you can go from there. So you need not, I mean, this is just whatever is your preference. I mean, you just have to be close to the current market price. That's it. That is. So 9:30, I just selected 16.3. 16.250 is fine. 16.2 is fine. 16.350, 400 is fine. You just have to be close to the current market price. That's it. That is all.
Can we take the positional bias on this future data by increasing the time frame? Like you chosen 15 minutes. If you increase the time frame, can we take the bias of
positional? You could probably look at 60-minute and go with it. You can, but you'll have to ideally cross check with this also. This Daywise on futures, Daywise Price and OI. Check the last column. This will give you a very good OI bias for the positional trades. This 5-day buildup. This is 5-day buildup. It is based on 5-day price change and 5-day OI change. So now once you get something like this long, go and check on the chart if it is really worth taking long here on 21st February. Otherwise, you can stay with short. Now from here, probably you will be short somewhere from 16th onwards. If you get in between, probably this is something just temporary. Even if you go long here, the next day you will be short. So just based on this, keep in your directional trades in that direction. Use spreads or maybe just go long options, maybe go long puts in that direction. Just keep your risk small. You can either trade vertical spreads or maybe, I don't know, based on your risk profile, you can do it.
So this is futures OI data?
Yeah, this is a futures buildup. Yes, futures buildup. Futures OI change. But this will give you very good bias. This will give very good, especially the last column. I mean, this day-to-day buildup can get confusing in between like this, but 5-day buildup will give you longer signals, and this will be reliable. This will be reliable. You can, because you're not taking signals. I mean, you are not straight away. Once you see this, you don't go and sell immediately. You actually look at the price chart and then decide. Like here, from almost, let us say from 11th or so, it is like it is bearish from 11th initially. From this is 11th. It is indicating bearish here, and then in between there was one day on 21st. On 21st, where it was indicating bullish. But if you see, actually, strictly speaking, this is not a great bullish setup. So you can remain short. I mean, maybe you can hedge something. I do this. I mean, this is something I use. 15 minutes, QnA channels. And something, when I see something pattern like this, I'm hedged over here, but I'm still directionally short. But I hedge here. And then again, when this lower band breaks, I'm again short here. Actually, I would have removed the hedge here and remained short. And then from here, it is all short until here. And this is again, just confirming the same, that it is still short. So positionally, this is good. I mean, go with your build up bias over here and then cross check with your price chart. And then you can remain in that direction. So this is better.
Sir,
and this,
what does 5-day build-up mean? Like, is it like from past 5 days, the continuous, it has been short build-up, or how does
it just means that the last 5 days price change is negative. So last 5 days, that is 1, 2, 3, 4, 5. So this is about 1.7% down in the last 5 days. And OI has gone up by 188%. So negative change with positive OI is short buildup. And this is for 5 days. 5 days price change, 5 days OI change. So basically, if you see 1.5% is basically this change, last 5 days change over here. And OI also, OI change, if you see last 5 days, it has increased by 188%. That is what you are seeing. So this will be a running total. Like Now this will be 5 days from here. So 5 days from here, 1, 2, 3, 4, 5, this way. Now this
Sir,
latest one, yeah.
How can we change this monthly when expiry happens? That there is a OI, like a big buildup. How can we smoothen that?
You can look at combined OI. Combined OI will give you 3 months based on 3 months OI. Now
Yeah.
this is 3 months OI. So you can see. You can check this. But ideally use this only when you are probably in the last week of expiry. Don't use this now. Now you can just rely on monthly because that is where the main action will be happening. But last week of expiry, go to combine, switch to combine because then things can change pretty drastically in the monthly expiry. So you need
Sure.
next 2 months data. Yeah.
Thanks.
So yeah, this is for positional, and this is what we had already discussed, more better for intraday. So any questions about this?
Sir, on last Thursday, there was a sudden spike in last 15 minutes. Can we just predict, how can we pre-predict that particular move to this chart and data?
Yeah, just a minute. Last expiry, right? Third.
The third of March, sir.
Yeah. 3rd March. 15 minutes, and let me quickly, just a minute, let me see what would be the 3rd March. We are looking at, so let us say we are monitoring 16.5.
It's very much clear in bank FT, sir, rather than we have a sharp 330 points move in 5 minutes time frame.
5 minutes time frame. Okay, you mean the futures chart? 5 minutes time frame. Bank. So this is bank. Where exactly? This one?
No, sir, this is a Friday. You just go to previous.
Oh, sorry. Yeah, okay. This one. Oh,
The
this
last
one you mean?
Yeah, that's what.
This is probably going to be difficult. See, even because I am suggesting you 15 minutes, you will not be able to catch this same time. Because Bank Nifty, right? Bank Nifty, 3rd March. 3rd March, approximately, what was the price here?
You can take it 35,000.
30, yeah, 35,000. Third March.
It is showing a 3rd February, Mr. Srikanth.
Oh, sorry. 3rd March. 3rd March. 3rd March, 35,000, third extra. Yeah, see, by this time, you did not even get. See, actually, this was an expiry. On expiry day, this is going to behave really strangely. Of course, you had. Let us still see. At 2:45, you had this long buildup and short buildup. So you had a long signal at 2:45, but I don't know if you will be able to catch it. Let us check here. Sorry. 3rd March call. It's almost impossible. I think you would be in the trade only after this has gone, because super trend signal you got after 3:15. It was over by that time. It's so fast moves. There's absolutely no way to catch unless you are like scalping using real-time data and all that. Maybe on 1 minute, but see, it doesn't make sense. Look at the price of 35,000 call here. It is 0.9. There's absolutely no way to catch this. I mean, I wouldn't even be looking at that. I will not be able to catch it. Definitely, I would not have been able to catch it. It's just not possible. especially definitely not using this. You would have to be a scalper. But even that, how would you? I mean, because look at the price here over here. It was like 34.8, and your call was at 0.9. Why would be on expiry day? Why would we be even get into this unless this is kind of a hero or zero trade kind of thing?
So my question is, can we predict this particular move through?
No. See, no.
It's not only for
Not possible.
that expiry. It's not only for that expiry. Whether can we predict that move for the next expiry option trading also? Let us assume I'm not trading.
No. This as I said, I was going to explain this for an expiry day. On expiry day, I would only suggest being on the short side, and actually by this time you would be totally out of positions. There's absolutely something like this can't be predicted. I don't know. Maybe you would be in this kind of a move, but even this may not be profitable. But definitely not in this kind of thing. I don't. You would not be able to catch such trades. I mean, this particular tool will allow you to catch something like this.
Sir,
Yeah.
no one will be able to catch. That was just because of a flash on CNBC saying that they're going to be talks with AD.
Exactly.
Can't
News
catch.
based, very difficult. And I am actually looking to catch something like this, something like this, but not something like this. I mean, these and these are just not possible.
So, can we use a long shot for stocks for BTST, sir, like STBST, for last half an hour moves?
You can. I mean, I have not checked this. There's OI scan. You can check OI scan and just check last minute 60 minutes build up here.
Okay.
So last 60 minutes, what is happening? Based on that, you can probably take it. You can probably decide based on that. You can filter over here and then use it. This would be useful.
Sir, is the recording available?
I can. I mean, yeah, this I'm recording it. I think so.
It will be helpful if you can post it in our Telegram channel.
Yeah. Actually, the last Saturdays or last Sundays, we had already posted on our YouTube channel. You can go and take a look. We had gone through the same, and I wanted to just reiterate that for what happened on expiry day, because it was a very good moves were there, and I was in those moves. So I wanted to just talk about that. So how it would have been. So this was just a minute. So close 1680, 16.7. Yeah, I was in this, and this got some really excellent trades here. Nifty 16.7 expiry. This actually I wrote through the whole thing here. This huge trade. I mean, completely this I was out somewhere here itself. Basically, this was very clear cut over here. You got a short build up over here itself. I mean, on expiry day, I just take action on whatever here, because I said this also is a strong signal. Both sides short build up. This means you are fine to go short on expiry day. This is one signal that I suggest we take, because time decay will start immediately on both sides. So this kind of signal is common. You don't have to wait for something like this. One side long build up, other side short build up. Even this is fine. Both sides short build up. I've taken a call short over here. But put also, if you see, put also was 3rd March. Sorry. 3rd March, put 16.7. Put was short, but you got exit over here if you would have taken that. Call short just went the whole way completely. By this time, you got to exit here. You could have exit, but I just booked over here itself. I didn't want to take further risk. It was totally clear. See over here, just a minute, let me finish this. Here you had a long signal for call at 10:45 and short signal for put. But 10:45 here, you are not in any position to go long because you would go long only over here. So you would continue in this trade. So you're short from here, so you would continue. And then you again got over here, it flipped back to short. Here also, this is both sides short, both sides here short build up again here. So call short continues throughout. Even though this was long over here, you wouldn't because there was no signal at all over here. This is what you will see very frequently on an expiry day. You would be able to ride such long trades using this. You just have to make sure you're on the build-up side and you're also validating with the price and staying with the price. And don't just look at long build-up here and just go and buy here. But unless you get a buy signal here, just don't go for it. Because the trend on that day is going to be down on expiry day. Here, put actually 10:45 was short. But over again, you would have gone short here, you would have exited again here. So it was that sort of a day where put did not have clear signals, but call did have.
So how did you decide the strike price? For example, in this case, 16,700, and in Friday's case, 16,300. So
16.7 is here. As I said, see, 15 minutes first bar, 15 minutes close. How much is it?
That was,
yeah, 16,680. So see now, if you go and take a look, 100 points up and down also, no problem, you'll be able to catch it. So this is 16.7 or 16.5, 16.6, 16.8, no problem. Very similar moves you will get. But some sort of objectivity is to be there. That's why I select this. You just take a look, either spot at 15 minutes, one at 9:30, whatever is the closest price.
Okay, that
ATM,
would be the strike
at the money, just go for it and just monitor it in this and just take a look what's the signal here. Just go with it.
Okay.
So around 9:30, you kind of decide, right, sir?
Yeah, 9:30, not before that. Once 9:30, so I entered around somewhere here. So this is what you can do. And of course, you need to know, you need to make sure that this is the stop you can take. Of course, you have to know that this will quickly get adjusted and your risk will quickly fall. So your stop loss initially is going to be slightly wide. So your risk is there, but your stop loss is going to be quickly, it is going to be close. So here you just keep trailing mentally, or if you want, you can just put it physically, few points above this, you can just do it. If you don't want to take this, otherwise, either book on expiry day, just you have your target, whatever have some target in mind, just get out of it, don't take risk. Or otherwise, if you want to wait, then just put hard stop, at least, or if you don't exit, just put a hard stop from here. Just put a hard stop over here. Every few minutes, say 15, 20 minutes, or just, say maybe 10, 15 minutes, just keep adjusting stop loss based on this. So at least you get out if there is a sharp move up. That is the way I would do it.
So can you tell us more on max pain, please?
Okay. Max pain, this is the this gives you the level itself, whereas this gives you a trend. This is a lot more probably useful from positional point of view. You can go select 5 days here, and this red is the max pain level. So which side it is going, that side is the price, the trend of the prices. I mean, the OI is getting built up on that side. It is indicating the bias over there. So whichever side the max pain moves is generally the bias. Of course, this tends to be a bit late, but you get some idea around where the expiry could be. And if you see historical, especially this is, people like to monitor this on expiry day. So on expiry day, it is going to be, you monitor this closely, say 1 day, and this will tell you on where the expiry is generally going to happen. and whichever side it is trending, when if it is changing, I mean, this of course goes up down a little bit, you get approximate, you are close to this level. So just stay with this level, should be fine. Around 100 points up and down around this level. If your option is, then you can capture whatever decay is there in that option. So for positional, look at 5 days, because generally what people do is when they go for 5 days, and whichever side this max pain trend is going, they do their adjustments on that side, because they feel that that is the way, that direction the price is going to continue. So for example, if this is the move over here, once price moves up and max pain also moves up, then people would tend to adjust in that direction, because maybe you'll tilt your bias in that direction until it starts changing. Now this, it kept going up over here, and then the max pain trend, it started coming down. Once it changes the trend, then probably it's time to adjust to the other side. Until then, you keep on adjusting on this same side. So that is what people assume, and they use this as an way of adjustment for positional trades. You see, even this big move over here, max trend was continuously trending down throughout the day over here. Same for the expiry day. This is the expiry day. It kept trending down throughout the day. The idea is to just stay with the level of max trend, max pain on expiry day. Fine. So, any other tool you want me to discuss?
Sir, for stocks, is there any feature for to know the rollover data for the next month? So just 1 week before the expiry and all.
That is a tool that I've allocated this task to one of my developers, so they are going to build it. Currently, it is not there, but we will try and get it out in the next couple of weeks. So currently, we don't have it.
Oh,
so, yeah.
Okay. Thank you, sir. Thank you.
So can we, do you have any setup or idea about the straddle charts for intraday trading?
Straddle charts.
Can we use as a trading tool, intraday trading tool, straddle charts?
Yeah, I've discussed about this. Let us say this. You need to use some kind of trend-based indicator. Either you plot a VWAP. I use QnA channels everywhere. So even on a straddle chart, you could use this, and as long as your price is below the QnA band, so you would be in the trade. And then as soon as it closes above the band, then you either adjust or you just exit. And ideally, I would just exit, because it can get really ugly very fast. Because if you want, you can check the price chart and the direction in which price is going. You can probably do some adjustments, but it would be tricky. And let me check Bank Nifty. So around 1245. Over here, 1245, price was trending up. Once that means over here, when it broke above this, price was trending up. So you could add one more lot of the put over here to make this adjustment at 1245. So 1245 is this is where you have made the adjustment. So after 2 lots, now this is the thing. The idea is to keep this price line after adjustment below this. The idea is to just make sure that the price stays below this, so you can capture the time decay. This is
actually 1 minute time frame is it okay for this chart?
It is. It could be too fast in many cases. You can experiment. You will have to experiment a bit.
Okay.
Intraday, see, there is again a balance required in this, because if you go to like if you go 5 minutes, then the thing is the risk will be too high.
Yeah. We will do it.
So you either, maybe if you think 1 minute is too fast, you go to 2 minutes, or then stick to 1 minute. It depends on your risk taking capacity. Idea is if you're initiating here, your risk is over here. So
Right,
this,
right.
can you take this risk is the question. And you can experiment with other trading, other indicators also. There are people who use VWAP. So you can use based on VWAP also, but it tends to be a little bit far many times. So I stick to Keltner. There are people who use moving averages also. So you can just put a simple moving average and experiment with the like, setting over here, so maybe 50 or so.
Actually, this Keltner
based on Keltner is
using moving average, right? 50 period moving average.
Yeah, Keltner, what it does is,
ATR plus.
Yeah, 50 moving average is the center line, this red line.
Right.
And then the bands are plotted using ATR. ATR on both sides of this. So this is basically 50 moving average. So this band will give you just some space basically based on volatility. So this is preferable. This is what I use in almost everything. If you see my charts, all these will have.
Right.
This is on futures chart 15 minutes for me. Positionally, this is what is my favorite setup. I make sure that I am in this direction of this, what is indicated by Keltner. So whenever the upper band breaks out, then I'm mostly in kind of long trade. And then when this breaks, the highest point of this, so over here, probably I'm hedged or something like that. And then over here, I'm short. This is totally short at the moment. So this kind of thing.
So
For straddles, it works well. Sorry?
Your software have backtesting features?
No, backtesting is not available at the moment. The plan is there to build it, but yeah, it will take some time. At the moment, it's not there.
Okay. Can you tell me what is the best time to, can you show some example, the straddle to enter best time? I mean, best setup.
Ideally, see, generally enter at the start of the day. I don't know if there is any best time as such, but see, if you don't want to position here, if you see at the start of the day, this is the position. And obviously the risk is pretty high over here because your stop is going to be here or your adjustment point is going to be here. So maybe you can wait and you can probably enter over here, or maybe when it changes trend over here to down again, you can enter here. Okay. You can choose something like that. Otherwise, there is no time as such, because what happens is just the time decay starts in the morning, so you might as well enter here itself. Or you can use this. We have a beta tool with multi straddles. You can monitor over here and which straddles in the morning are trending down. You can take a look, and then you can probably switch and monitor closely based on this. But you can overall monitor this over here. You can do this.
Okay, so this is using VWAP plus price action. Price.
Yeah, VWAP and price. VWAP and price.
Okay.
What is the use of snapshot and straddles? Straddle snapshot column.
It is just to give you a quick overview of where the decay is happening in straddles. This is at the money, so you quickly know where the decay is happening. Basically, obviously, most of the time the decay will be around over here, but it will just tell you. I mean, currently in this particular session, like today, what is happening, and then since previous close, what has happened, and 1 week change and monthly change. All this in points. So it will tell you what is happening. So this is today, since morning, this is what has happened. It shows this, and this since previous close. So if you see, overnight change is significant. This is happened only today over here, but overnight it changed significantly more. Almost like what, four times, almost four times the change overnight.
Will it help which strike we can take the straddle? The difference showing this.
It doesn't really see. The most time decay is going to happen at the money straddle. So that which straddle to take is not relevant for straddles. It is more important for strangles. not for straddle. Straddle, you might as well be at the money because that is where you have most cushion. See, this is going to be where you have most cushion because here this whole thing is going to be time value. Most of it is going to be time value. Everywhere else, the rest of the places, this is going to be some intrinsic value also is going to be there. The time decay is the most here. So that's the reason why you want to be here. The most theta is going to be here. So for straddle, it's clear cut. You don't have to think much. Just go with at the money or be closest to the money. Now for strangles, that is, it is a totally different question altogether. For strangles, what you would have to do is generally you would have take at the money in the morning, at the money, add up the last trading price, the straddle price. Straddle is around 460, 70 something, 470. So say 500. You have to be 500 away from this, 500 away from this, because that is the range that is being predicted by the straddle until March expiry. That is 10th expiry. So on 10th, 500 points up and down. So 1000 points range is being predicted because the volatility is more at the moment. So that is what this is indicating. So this will give you a good idea which triangle you should be in. So if you are in lesser than that, if you are within 500 points from ATM, then that is a problem. You are too close. I mean, you stay away. The 1000 point range should be probably you should look at. And for Bank Nifty, you can take a look. Bank Nifty is around 1200, 1300. So you need to be 1300 points away on this side and this side. So 2600 points is what is the range being indicated by Bank Nifty. Because of course, volatility is huge at the moment. That is the reason why it's so large a range. But if you are within that range, if you say, I'll just say 500 points up and down, then you're pretty close. 500 points can get hit anytime. So you have to be, for strangles, this is important. For straddles, just go with the ATM. You just want the time decay. And straddles, there are many ways. I mean, there are many ways. This is only the technical part of it. There are many strategies available on the net. I mean, I don't know, so many people have strategies, various kind of strategies. One very interesting one that I had found was Nikhil Gupta's strategy on YouTube. I've got quite good ideas based on that. Basically, you initiate straddles immediately after open, and then you exit one leg based on whatever some criteria he says. Whenever the total straddle loss is about 5% of the initial value, you could exit based on some other indicator. It's up to you. When you see, I mean, call, so you can individually look at call prices, and if call price hits say 20, the value goes about 20% of your initial price at which you had shorted, then you might exit the call. And if it market goes down, and or maybe then put goes maybe 20%, 25, 30% of the price, I mean, it increases by 20, 25%, then you can probably exit. And then you keep your next leg open until the Bank Nifty hits super trend on 5-minute charts. It gives the other side. At that point, you close this one also, and then you initiate a straddle again at that point. I don't know if it is this clear. Let me go to Bank Nifty, 5 minutes. Maybe give you some.
But will be loss on both the sides, huh?
No, it won't be. That is, I'll quickly give you that idea. You should check that video. Just search for Nikhil Gupta straddles, and you will get that video. I think he would be able to explain it. He has explained it better in the video with very clear cut example.
What is his name? Please come again.
Nikhil Gupta.
Nikhil Gupta, right? Fine.
Yeah,
I'll know
yeah.
it.
Okay, here after what it is, after 5 minutes, you have initiated over here. Say 35.339 is it? So maybe 34.4 you have initiated. I think if you go to Straddle Watch, it will be a lot more clearer. Straddle Watch, Bank Nifty, 34.4, 10th March. Okay, what it does is, let me turn this off. So this is being initiated over here at say 920 over here. Now call price is 697, so say 700. Put price is 760. So and straddle price is like at 20. Straddle price is going to be, straddle price is 1458. 1458. Now 5% above this. Once it goes 5% above this, so about it increases by 75 points, then you exit. So straddle 75 points, I think it got hit only over here, somewhere over here. So that is one way. Over here, you would exit the call side of it, and put side you would keep holding it. So at over here you exit call side and you keep holding the put side. And this, he says, the setting here is 10-2. 10-2 is suggested by him. So, and this point, so here your put is active now. Here by somewhere here, put is active. You hold the put here, short over here. And then by here, what you do is, at the money here is around 35.9. So you close this put, 34.4 put that you had initiated here. And then you short 34.8 or 34.9 straddle over here. It is that way. And then again, you somewhere over here, you exit put side and you hold call short until here. It's like that. And then you would exit. If it breaks above here, you exit the whole thing and reinitiate the strategy. Just go through that video. It is interesting. Of course, I have made a few changes myself. Based on that, I do it, and it's quite easy. I mean, you don't have to wait for the straddle itself to go here, because then that will be too late. What you can do is you can keep monitoring call and put chart, and probably exit based on that. You can lots of ideas are there. Probably you can exit based on this over here. Here itself you can adjust, or you can just look at the call and put price, and based on that, whichever price, I mean, it goes by whatever percent, you can exit this. There are various ways. I mean, you can fine tune, lots of ways to fine tune this. But I have seen that this strategy is workable. Quite steady profits can be built using this. But you need to look at Nikhil Gupta's full video, because he has explained it very well, and that you'll probably get all the rules. Because then at the one more rule is, once you exit one side, you're exiting call side over here. Put side at the same time, you will set a stop to cost stop over here whenever you exit one side. So at least
on the losing side. Exit on the losing side.
Yeah. You exit on the losing side, use a losing leg, and you hold the winning leg until over here. So, but at this time, when you close your losing leg on the profiting leg, you set a stop loss which is cost to cost. Where you have opened it here, whatever is the cost, set it cost. So if it goes down over here, at least you don't lose much. Only the call side, whatever is lost is lost. At least you break even on the put. But otherwise, then it goes on, and then you exit here, the whole thing, and then you reinitiate the straddle. Whatever ATM straddle is there, you reinitiate it over here. This is just one idea, one of the many ways to trade straddles. There are many ways. You can fine tune it. Go and check the video. It is really good, and you'll get lots of ideas. Sorry.
Share the video link. Can you please share the video link?
Sure. I don't know where do I. Okay, just a minute. Let me go and check on YouTube.
Actually, I have tried to search, but I am not getting that on YouTube. Nikhil Gupta.
Okay, 1 minute. Nikhil Gupta straddle should be there. Yeah, Nikhil Gupta. You just search for Nikhil Gupta straddle, you'll get the link. Or copy. Okay,
But
can I?
There are links, but that is not published by Nikhil.
No, it's not, definitely. It's not published by Nikhil. Somebody had taken his, it
Okay.
is Trading with Gurdeep Arora is the YouTube channel.
Right.
That's
Yeah,
the
it is
one.
there.
That's the one. Yeah,
Yeah.
go through it in detail. It is very, very nice. And of course, you'll have to make your own adjustments and make sure you make your own adjustments and get the risk within your parameters. It is a very, very flexible system. And I think it has some very good ideas because from my experience, I traded it continuously for a few months and it is good. You have to, of course, fine tune a little bit
Right.
and make it your own system. You can do it. The basic core ideas are excellent. What I feel.
So do you have any dashboard of your software and wherein it is showing the overall trend, which with the help of PCR and different mechanism, with the help of OI, overall trend based on certain parameters?
No, nothing really. Actually, this plan was there since a long time. We actually wanted to make for subscribers. We wanted to change the homepage itself to a full-fledged dashboard. So once you log in and you are a subscriber, then this page would actually change. But we have not been able to do it. I mean, we wanted to put a lot of information over here. So the plan is there. It's just that there's so many things, and now all our developers have got totally bogged down because we are trying to implement those trading view charts. So everyone is busy now. So and there is a long list of things to do. So we have not been able to get to this. And some part of it is done, but it is not complete. But we plan to do it. And for subscribers, once you log in, this is the page we wanted to make a full-fledged dashboard where you will get all sorts of information here. Single page where Nifty, Bank Nifty, current build-up, trend, bias, and all that, everything, advanced decline, gainers, losers, in a lot more detail. I mean, this is very basic stuff. A lot more details like open high, open low stuff. What all we can put it over here, we want to put it and give a very, very easy to look at dashboard, but it's to be done. We'll do it at some point. At the moment, it's just a plan. We'll see.
Look, can you please include India VIX chart also in this one intraday charts?
India VIX, the issue is we don't have the cash data feed. We have only bought the FNO data feed. At some point, we'll buy the cash data feed also. It's quite expensive actually. That's the reason why we couldn't take it now. So once we get that,
a lot.
Yeah, very true. Yes. We'll see.
That in India VIX chart actually I'm going by it and it's helping me a lot in enter and exit both.
Sure. We'll do it at some point. We need to just go for the cash feed actually.
If you can overlap on the Nifty charts and other things, it will be terrific. Nestly, what should I say? Pivot levels you can include weekly, daily, and monthly pivot level. I think that is an easy thing.
Sure. Okay, one more thing, please use our portfolio tracker. So wanted to just tell you that kindly take a look and use it. If there is any changes, just let us know. Quite a few changes are pending in this actually, so we'll do it at some point.
How to use this one portfolio tracker? Can you please guide us?
Yeah, it is available on tools, portfolio tracker. Once you go there, you get a blank screen. You can add a trade. So once you add a trade, you get this blank screen. You can add option legs to it. So you can give a name to your strategy. So let me say just test. And
is it from the option after as I see the features or something like that?
Sorry?
Is it in link? What should I say? Coordination with the option Astra. You got this one, huh? Option Astra side.
It is something like that, something similar to that. I mean, strategy builder that they have. This is our kind of strategy builder.
This is a proprietary trade, right?
Yeah, this is something we have built actually.
Okay, right.
So yeah, so here you just add a trade here. So you can add a trade here. So you can add your option trades, and then you can click analyze trade to view payoff charts.
Okay.
So we can view this. So this margin is still pending. We need to get this information, but we'll add it soon. So, but rest everything is done in this. So you can do your what if analysis here. What happens if IV goes up and all that. So what happens after 2 days? So all this you can do your study, what if study here. So all this is there. Just please use this.
What is the top and left-hand side live trades?
Live. No, this is just a way to group trades. I mean, you can group your trades under live. You can move trades to paper trades or miscellaneous trades. This is just for your grouping. This is just tagging your trades. Nothing like that. I mean, all these three are same. But if you want to just track your live trades under this, you can track some paper trades. You can put those over here. So you can just tag those here. You can select few trades and say these are paper trades. So they'll be moved from here to here. So you can go here and then check. So if you have too many trades, to remove confusion, you can do this. This is just tagging actually. Nothing special in this. Everything updates live every minute. So all these are same. Just grouping is there. That's it. And then once trades are closed or expired and all that, you can select and then you can archive the trades. And if you want to go, you can go and check and archive trades. So you can do that. So if you click here, if too many trades are there, I have lots of trades. It will take a few seconds to retrieve. So all these trades are here. All these are archived trades. You can do this. If you want to go back to active trades, you click here, you come back to active trades here. So this way.
Any live trading we are going to conduct shortly on expiry and even days?
Sorry? In
live trading means nowadays most of the people are doing it on live trading, sharing.
Sending the trades, actually submitting trades, you mean. We don't have that actually. We don't have that yet.
This one is okay, but most of the people, they are recently started live trading, sharing now, trading room.
No, we don't have it actually. We don't have it.
Okay, right.
Yeah.
All the features are excellent for a very small amount of fees. I am very happy to use your OI charts.
Okay, thank you.
Sure. Good morning, sir. I have one question. So is there any scanner or a filter for stocks which are near their supports or resistance based on options?
Currently, it is half done. Support resistance scan is there. It is half done, and the way you need to use this will tell you how far it is from max OI strike. Max OI.
Yeah, that's right.
So actually, 1 minute. This is not. Yeah, this is.
Sir, is this updated on intraday basis also?
Like, yes. So when you say support, it will tell you stocks which are close to the max put strike, where the max OI is there for puts.
Correct.
Yeah. And you need to look at these actually, which are either this will tell you this is just below the strike, this is just above the strike. So it's that way.
Yes.
So you can use this. And for call max close to resistance. So if you click resistance and submit, these are close to call. So near resistance, there are very few. Actually, all are far from resistance.
Far from
only these two are there.
So so can we add some color grading, like say 0 to 2%, some green color, 2 to 5% away from the strike price, like yellow color or something like that? So that
fine. We can do that. Yeah, this is actually half done. This is still pending to be completed. So we'll add it. We'll add that way. I think that would be a good idea.
Yeah. Sir, one more question. Is this updated every minute on intraday, right? Every minute, right?
Yeah, every minute. But ideally, price will change every minute over here, and this will change every 3 minutes.
3 minutes.
Call OI, yeah. Call and put OI.
Sir, under futures, I can't see this particular thing. Futures scripts near max OI strike.
No,
It's in beta 2.
it's over here. Over here.
Beta.
Because this,
oh.
yeah, we have put it here because this is not yet complete actually.
Okay, sure. Thanks.
Yeah. Any other question?
So, please try to include a pivot levels, so weekly, monthly pivot levels in charts and other things, so that we can have an idea, right?
You want pivot levels inside the chart or a table like this? How do you want?
No, table wise, and also if we want to, we can load it on the charts, because only up to daily only we are able to see it. Weekly we are not able to see.
Yeah. Now once I think once we are already started working on TradingView implementation. So TradingView will have a lot more richer indicators and tools in that. All those pivot levels and all that for every time frame should be available. It'll be a lot more easier to use this particular current charting tool. It's not that clear. I mean, not easy to use pivot levels actually. So just hold on for some time. We'll try and just implement those charts very soon. Then you will have. You should be.
I think in table format you can do it immediately. No, that one.
Yeah, table format we can do it. Lots of things are pending and it is a long list, so it could take time. So at the moment, all our developers are busy implementing those TradingView charts. So the other tools will take some more time for us to build. Let us see. That is noted anyway. So pivot level table will give it. That also will be built pretty soon. Should be available.
Sir, one more query, like in this option, in this tables of option OI breakup and all. Okay. Yeah. There are so many columns like VWAP, day, all these individual columns. Can we get an option to switch whichever we want, whichever columns we require, like that way? I mean, all those, because I am using this Vivaldi browser in multi-tab mode. Okay, so all these, so once I just want to get all things in one screen. So when we are using this multi-tab facility, so many those different columns and columns if are not required can be switched off or something like that. Can we?
Sure, we'll do that. Yeah. I'll ask my team to do it. It is there in option chain, probably something like this we can do. We can turn off the columns.
Exactly.
Fine.
Exactly. Yeah,
we'll do it. It is to be done in actually all data tables. Wherever data is there, we need to do that. So we'll try and do that. Yes. Yeah, it's required. Okay, so it's almost 1.5 hours. I'm surprised that Zoom session didn't get over. I'm very much surprised. I think they said some offer was there, so I think they have just not restricted it for some reason. Lucky. So that's it. If any questions are there, I can take. Otherwise, we'll just stop in 5 minutes. Any other questions for anyone? Nothing, then we'll leave.